Morning, Steve Reed in Chicago with the morning grain comments. Well, we have prices lower overnight. There's some profit taking after the wild week. For the week, nearby wheat's up 47 cents, corn 47 cents, beans 81 cents, meal $13, and oil 435 points. Funds long 219,000 beans, a whopping 560,000 tons of corn. Contracts of corn, 122,000 contracts of soybean oil, and 35,000 contracts of Chicago wheat. We'll be watching deliveries, especially if there are no deliveries and if there is a squeeze maybe on the May soybean oil. We noted that the next thing we will be watching is the USDA May report for 21-22. Stocks to use ratio could continue to be low for the next 2 years. Long-term weather forecast continues to have some ridging this summer in parts of southern Saskatchewan, Manitoba, North Dakota, South Dakota, parts of Wisconsin, Minnesota, Iowa, and Nebraska. So I don't think we've seen the highs in the market yet, especially in new crop contracts, if the weather does pan out that way. China March hog production is up 28% from Feb and 75% year on year. We've got positive U.S. soybean crush margins, and so that would suggest that the carryout might be coming down from the USDA's number. And right now, we need maybe to rally the November beans versus D's corn to try to buy some acres. Argentina crop production, 43 million metric tons. Harvest is 19% done versus 56 last year. We've seen some increase in Brazil and Argentina farmers selling on yesterday's rally. Matif, Canada rapeseed oil contracts making new highs. Argentine corn harvest 17% versus 35 last year, with crops still at 46 million tons. Matif corn futures making 8-year highs. There's no evidence of China actually buying U.S. new crop corn, but we think that China is the biggest short in the world as far as corn and beans are concerned. They've not yet bought new crop as much as they were long last year at this time. I think wheat futures has to follow corn because it cannot increase any feeding more than it already has, even though some of the fundamentals might be more negative to wheat than corn. We still have to be worried about this dryness in the U.S. Spring wheat areas, some dryness in Europe, and too wet in parts of Russia. Matif wheat futures made new highs, and as far as exports are concerned, U.S. is not competitive in the marketplace. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like yourself would like to be treated.